Okay, well, there's so many stocks which are going to be on our radar this morning, but I just want to, quickly see what some of the gold-related or gold-linked stocks are up to, because you're bound to see perhaps some more pressure. Can't really say on some of the gold retailers. Let's see what the likes of a Titan, what a Thangamayil, a Senco Gold, etc. are up to in trade. And these are just the pre-open rates, of course. And then what is the impact on gold financiers as well? That's going to be the other interesting angle to track. Senco Gold is down another 3 odd percent. And mind you, these stocks have already fallen about almost 7 to 9% on a daily basis. And that is how sharp the reaction has been on these stocks in the last 2 trading sessions alone. And a big move up on a Manappuram, and maybe Muthoot would be following the same particular pattern as well. What about technology names, TCS, TechM, Wipro, etc.? Are they still facing the heat? HCL Technologies was a rank underperformer, somewhat stabilized right now. ICICI Bank, HDFC Bank, SBI, let's check in on those names. L&T, Bharti, M&M. Let's revisit some of the pillar names in the market. And some sort of stability is what you're seeing. 1% lower for Bharti, 1740 is where that stock is. ONGC, Hindalco, maybe that trade is going to continue for these two names. And let's see SBI, which was a relatively resilient one of the lot. And Hindustan Zinc, look out for what that stock as well does in trade today.
Right. In fact, joining us, Nirmal Jain, founder and managing director at IIFL Finance, joining us. IIFL, of course, has a decent-sized loan book within the gold lending space. Nirmal, great having you this morning for that perspective. I'll first take the larger peg, which is with regard to gold and what that does. The spike in gold prices obviously gives you comfort with regard to loan to value. Apologies for that. But obviously it gives you some comfort with regard to loan to value. Give us a sense. What does this spike mean? It will kill demand. Does it mean that gold loan growth might get impacted as a result of this?
Hello.
Yeah. Okay. We'll just patch him right back. But essentially, it's one of the pegs is to try and understand what will happen to demand for gold loans due to the kind of duties that have been imposed on physical gold imports and what that does to business for IIFL Finance. We'll try and get that phone straight back in. Okay. Nirmal, am I audible?
Yeah, you're audible.
Okay. Hi, this is Harsh Saita. Good having you this morning, sir. Give us a sense, first off, to try and understand and help us break down what this higher duty structure for gold imports means for a lender like you, especially on your gold loan portfolio. Does it impact growth?
Yeah, in a way, it's positive for the growth because the loan to value goes up.
Yes.
And the purchasing, basically how much borrowing customers can do, they have a more leeway there. And in an environment where many of the MSME businesses will be impacted by supply chain and the inflation, probably they'll need more working capital. So this is very handy at this point in time.
And therefore, talk to us with regard to gold demand. That obviously comes off. New customers coming in, that may limit at least new customers. On your existing base, of course, you might see good growth.
No. See,
okay.
A gold loan is always against old jewelry, not against bar.
I understand.
Jewelry also. So the primary purpose of gold loan is not to encourage speculation in buying gold, and that's why these regulatory restrictions are there. So as far as gold loan industry is concerned, the total value that it can lend goes up. And how that is utilized is between the borrower and the lender. So lenders want to be conservative, they will not release the entire thing. And the borrowers also probably, based on their need, will have a higher capacity to borrow.
Okay. And Nirmal, very quickly, with regard to this tax demand of 480 crore, I understand you've come in the past and you've spoken to us about it and said that it's not a material impact. Would that largely be the stance even now?
Yes, absolutely.
Okay.
So, good thing is that assessment has concluded.
Right.
With a demand of 4.76 billion, so we can go in appeal. Because based on facts and the legal position, we are very sure that there is no additional demand required from tax authorities. We always paid our taxes properly, always in time and fully, without any any tax planning or any tax evasion. So this is for last 6 years block assessment, and once the assessment is done, then the next step is to go in appeal again.